Gold prices stabilize after Federal Reserve decision on interest rates. Overview of recent gold market dynamics. Gold prices saw a significant reversal in London trading on Thursday, May 2, 2024, stabilizing at around $2,300 per troy ounce. This change followed an overnight rally that temporarily added $30 to the price, sparked by the U.S. Federal Reserve's decision to maintain current interest rate levels. Federal Reserve's impact on global markets. Stock and bond market reactions. The global stock markets recovered approximately one-third of the 1.5% decline experienced earlier in the week. Bond prices also rallied, driving the costs of 10-year Treasury borrowings to the lowest point in 2 weeks. This market response came after the Fed announced a reduction in the pace of its quantitative tightening, while affirming that short-term interest rates would remain at the 2-decade high until confidence in decreasing inflation is secured. Gold's reaction to Federal Reserve policies. Rona O'Connell, a bullion specialist at brokerage StoneX, described the gold market as neutral in the aftermath of the Fed meeting. The Federal Open Market Committee, FOMC, maintained a higher-for-longer approach to interest rates, which had been briefly set aside at the end of 2023. This stance is significant for gold investors as it influences dollar strength and, consequently, the gold prices. Nikki Shields from the Swiss Bullion Refining and Finance Group, MKS PAMP, highlighted that major central banks are now more willing to accept prolonged inflation, a sentiment that gold prices are reacting to amidst solid physical demand. Economic indicators and gold prices. Manufacturing data and inflation concerns. The latest U.S. manufacturing data revealed unexpected weaknesses, with the ISM PMI survey indicating that industrial activity shrank in April, and input costs surged to levels not seen since June 2022. Despite these challenges, Federal Reserve Chair Jerome Powell dismissed concerns of returning stagflation, reminiscent of the 1970s and early 80s, citing current economic growth and inflation rates which do not mirror those troublesome times. Federal Reserve statements and projections. The Fed's May statement echoed its previous communication from March, but noted a lack of progress towards achieving the 2% inflation target, despite strong job gains and a low unemployment rate. These economic insights are crucial for investors watching for signs of policy shifts that could affect gold prices. Precious metals market movements. ETF dynamics and silver prices. On the day of the Fed announcement, the 3 largest bullion-backed trust funds, including the GLD and IAU gold ETFs, experienced small outflows, indicating a slight reversal of their recent growth. Meanwhile, the silver market also saw a retreat in prices, dipping to new 4-week lows just above $26 per troy ounce. Regional gold prices. In regional markets, the UK gold price per ounce steadied at approximately $18.40, while gold priced in euros held at $21.50. Both measures reflect sustained interest and value in gold as a safe haven asset, particularly in times of economic uncertainty. Conclusion: navigating gold investments in current economic climates. As investors and traders navigate through the complexities of gold investments amid shifting economic policies and global market reactions, understanding the interconnectedness of these elements becomes crucial. The Federal Reserve's decisions on interest rates and economic outlooks play a pivotal role in shaping market dynamics, influencing gold prices directly. As such, staying informed through platforms like our Gold Market Reports on YouTube can provide valuable insights for making informed investment decisions in the precious metals space.